Alrighty guys, so I'm just going to segue over the slide. We are resuming on page 93. Please, if you have not already, get out a calculator because we are going to be doing some overtime calculations. The advantage is that this is actually going to be our second exposure to calculations when it comes to overtime, but nonetheless, I want to give it the TLC that it deserves. I have seen overtime calculations, both mathematically and conceptually, in the exams. I believe I saw it in the PHR, SPHR, and it was the APHR, the PHR, and the CP. But in any event, just alerts me to the fact that this is quite possible for you to see and also have to calculate. So I want to go through this thoroughly for you. What are we going to do in this section of compensation laws and regulations? Well, what we're going to do is we're going to take a look at the federal compensation law. So once again, please, I'll just remind everybody that everything and anything that you could be tested on is only federal level. Well, we talk, for example, about overtime, we talk about minimum wage. I know that minimum wage will vary from state to state, but for your exam, everything is just federal level. And then, of course, I want us to calculate overtime, and I want to talk about bonus and how that impacts overtime. That being said, of course, we're going to take a look at quite a few laws that you can absolutely continue to build out that summary of laws table if that's something you have been working on. Alrighty, first and foremost, as you see on page 93, let's take a look at the Davis-Bacon Act. If this term or this name doesn't really sit well with you, come up with a funny little nickname. Think of bacon. If you like bacon, yum. I, for whatever reason, think of this as the Kevin Bacon Act. I think of the actor. The key buzzword here is bacon in this case. But the Davis-Bacon Act is also known as the prevailing wage law. So I don't know about you, but I'm stuck. I always want to try to find a reason as to why something is called what it is. It's either named after somebody. So then I like to do the research and the history of, hey, who was this person? What kind of, precedent-setting contribution do they make to, I guess, the way the world works? Or, in this case, I want to understand why is this called prevailing wage law? Now, I know that this is a wage law. It's a law governing wages, but why prevailing? So, if you're also struggling with trying to find the logic in this, then please, let's play a word association game. The word prevailing, what does it mean? I don't know about you, I had to pump this into a thesaurus. It's not exactly a word I use every single day, but, okay, so we have here to win, victory. Okay, anything else? When I pumped it into the thesaurus, I came up with principle. I came up with usual. Came up with fundamental. So maybe, because it's convenient for me and the point I'm about to make, let's focus on that just for a second. I'm going to just chicken scratch here, usual and fundamental. Fundamental. There we go. There's another good one, ongoing. So with these key buzzwords in mind, and I'm just lazy to write ongoing. I think that's a good one as well. So keep that in mind as well. That's all this law is all about. That's it. Now, this law is also not talking to everybody. It's talking to federal contractors. So this law says, hey, if you're a federal contractor, you are obliged to comply with the prevailing wage law, which means you are to pay all of your workers the going wage based on your locality. So it's not per se on minimum wage, it's based on what's going on. If the going rate is $100 an hour, I want to work there, but if it's $100 an hour in that vicinity, then the Davis-Bacon Act says you got to pay people per that going rate. That is the fundamental. That is what has been set as the standard. It's kind of like saying, we sell things in general, as anybody who's selling anything, whether it's a car, whether it's a house, whether it's a pen. We sell things based on a price. What is the value? Truthfully, consumers dictate the value. The price is whatever you're willing to pay. That's how prices are pretty much set. So that's the mentality of the prevailing wage law. And those wages shall prevail. And that's the victory we're going to make with our paycheck. It's not based on, if you will, the Department of Labor setting our standards for us, telling us what it should be. It's not based on anything like that. That being said, Davis-Bacon Act, or the prevailing wage law, also says whatever that prevailing usual going rate is, we also are going to acknowledge overtime is going to be paid 1.5 times that regular rate of pay. That regular rate of pay is that prevailing wage. So it's pretty subjective. Then we move on towards the bottom of page 93 to the Copeland Act. And from that, we saw a spin-off act called the Anti-Kickback Law. The Copeland Act basically says, hey, Secretary of Labor, you actually are going to tell us how we're going to manage our payroll. You tell us what those deductions are. You tell us what that reasonable going rate is. So our locality is not going to determine what the going rate is. Secretary of Labor, you are going to. But as well, once again, the Copeland Act is really going to be targeting just those federal contractors. So it's not necessarily everybody, if I may. Now, these contractors, by means of complying with what the Secretary of Labor wants, has to show all of their payroll deductions. Let's go back during times of trying to recover from the Great Depression. These contractors didn't want to have to pay the government anything off of our payroll, for example. This actually hurt, obviously, their expenses. And what they used to do is they used to say, hey, listen, employee of mine, you better be really grateful that you're working. When the economy is in the slumps, there isn't a lot of work to go around. You are so lucky you have a job. But because of you being my employee, I have to pay the government all these deductions, as do you, but I don't care about your paycheck. I care about my expenses. Secretary of Labor is coming after me. But if you want to keep your job, you need to reimburse me. So there was some like back alley kinds of sanctions going on. These employees were being coerced. And at that time, people just wanted to put bread on the table. They would have done whatever it takes to be able to bring home a nickel. So enter in the anti-kickback law. Now towards the bottom of this, I guess, blurb, if you will. The anti-kickback law prohibits unfair treatment during such difficult times, particularly, of course, back then in times of desperation because of the Great Depression. The anti-kickback law, as you can see, was passed in 1948. Think about the timing of all of this. And it basically says, hey, federal contractors, none of these back alley deals. You cannot go to your employee and say, you better reimburse me for the deductions that the Secretary of Labor came after me for. There's none of this. There's no kickbacks, hence anti-kickback. This is the cost of doing business. You can't afford it, don't do business. So that's the Copeland Act and anti-kickback law. But again, like the Davis-Bacon Act, we are talking about federal contractors. Let's talk about non-federal contractors. So we enter in the Walsh-Healy Act. Really silly reference. Once again, if you have to try to find cute little nicknames to try to remember this, I think of Walsh. The Walsh family. Brenda and Brandon Walsh. 90210. Reboot August 7th. Anyhow, but if that helps you, then I am so glad that this silliness is going to help, just recall this really wacky moment. The Walsh-Healy Act is actually an extension to the Davis-Bacon Act. Remember, the Davis-Bacon Act said, hold on, federal contractors, you're going to go based on the prevailing wages. Well, the Walsh-Healy Act, as you can see in yellow here at the top left-hand corner, this is also known as the Public Contracts Act. So it's not necessarily private contracts. This act is going to apply to non-construction, yes, federal contractors. So this act sets the basic labor standard based on minimum wage rates. So Secretary of Labor is involved. Davis-Bacon, Secretary of Labor, was not involved. And Secretary of Labor, to that respect, is going to say, we're talking here about, yes, imposed minimum wage rates. So we do see those minimum wage rate standards put in place versus prevailing rates per the Davis-Bacon Act. But this act as well is going to pay anybody who works in excess of 40 hours 1.5 times the regular rate of pay because of overtime. So those are 3 of the 4 laws. Everybody so far so good? Are you guys okay? I'll be honest, from my experience, for what it's worth, the likeliness that you're going to be challenged on these, I think, is slim. I'm never going to say never, but I just don't think it's likely. I hope I'm right. What I do think is more likely, because this is a little bit more current and this is probably a little bit more plausible in everybody's, sets of scopes and responsibilities, is, per page 94, the FLSA, Fair Labor Standards Act. Okay, so let me first just put this out there. Will this change this year? I don't know. I don't know probably any more than you do. I know the whispers on the street. I know, of course, what is being proposed, what is being suggested. I know, of course, the bullet that we dodged. Don't love that expression, but I can't think of a better one. Back in 2017, or was it 2018? No, it was 2017. In any event, please go into your exam with the knowledge that we know is solid and locked into law as it is today. The exam's not going to ask you, I don't think anyways, what they're speculating, because that's not fair. So in any event, FLSA is also known as wage and hour law. This law tells us a lot. It tells us minimum wage standards, federal level, tells us the overtime pay standards, which we're going to take a look at, tells us about child labor standards, helps us define exempt, non-exempt, as it is today. That's all that we care about. Okay, quick question for you, please, before we go in and we do some calculations. Which law or laws require that employees who work more than 40 hours per week be paid 1.5 times their normal rate of pay for overtime hours? Which law or laws? Okay, I've got lots of responses just flowing in. Fantastic. Okay, beautiful. You get double points if you enter in the right answer twice. Just kidding. Okay, FLSA, absolutely. Davis-Bacon, bacon, BLT. Since I'm hungry, I'm always hungry. I'm like a bottomless pit. The Kevin Bacon Act, the prevailing wage. Yep. Walsh-Healy, the 90210 Act, which basically is an extension of the Davis-Bacon Act for non-construction federal contractors, if you will. Yep. Therefore, you guys are right. D is the correct answer. Amazing. Okay, let's talk about overtime. Overtime, we're talking obviously about non-exempt employees. We have 2 key buzzwords. Yes, I think we just said the same thing. Yes, hourly employees and non-exempt. So in other words, they are not exempt from being paid overtime. I always have to remind myself, why is it called exempt? Why is it called non-exempt? So if you are, for example, which I imagine you guys are because we are working professionals, so I'm going to say, your white collar categorization, remember that back in earlier in Unit 4, we are probably all exempt. We are exempt from being paid overtime. We are exempt from comp, like additional compensation, if you will. We fall into that wonderful category, as I once had a manager tell me, you work until the job is done. Ah, that feels good. Okay, so good. We're on the same track. Perfect. There's 2 key buzzwords that I want to review with you because, frankly, understanding these and really getting them, on a deeper level, is going to make or break whether or not you do the math, if you're faced with math, but if you do it correctly. First of all, overtime, no doubt but let me just, put out the obvious. Overtime applies when you have worked in excess of 40 hours a week, and of course you are an hourly non-exempt employee. Those 40 hours are measured based on a regular work week. Now, some of us, I know me professionally growing up, I always thought regular work week is Monday to Friday. I guess maybe because I had parents who worked your typical Monday to Friday office job. But that is not the case. And many of you might be thinking that is so not the case. I guess it all depends on our perception, our experience. FLSA defines regular work week as 7 consecutive 24-hour periods. Think of manufacturing plants. Think of retail. Think of restaurants, hotels. They don't just necessarily operate Monday to Friday, 9 to 5. So it's 7 consecutive 24-hour periods. That's what a regular work week is. Now, that doesn't necessarily mean it starts Monday morning, 6 a.m. It's whatever the company chooses in terms of how they measure their work week. All they have to do is be consistent. So some companies might choose Tuesday afternoon at 3:11 p.m. is how we start to measure the 7 consecutive 24-hour periods. Some companies may decide Sunday at 11:47 p.m. I think it is pretty common, be it either Sunday or a Monday, because that tends to be, and I think every company is different how they acknowledge a new week. I personally measure it from Monday morning, 7 a.m., but that's what a work week is. So if you work in excess of 40 hours during a 7 24-hour period, consecutive period, 7 24-hour consecutive periods, then you are eligible for overtime. If, for example, work week is, let's say, Monday morning through to, I guess, Sunday night, and even though, let's say, you've worked, 8 consecutive days, but only maybe, 3-4 hours a day, however the math works out, Monday starts a whole brand new cycle. Something to keep in mind, because you could see a tricky question that, kind of tries to describe a calendar, and you almost want to map out a calendar, mind map it, and you need to measure what are these 7 consecutive 24-hour periods. And then, and this is really the kicker, there's the regular rate of pay. Overtime applies to the regular rate of pay. What is the regular rate of pay? It is the hourly pay, $10 an hour, $15 an hour, whatever it is, plus non-discretionary bonuses, plus shift differentials, plus production bonuses, and commissions earned. So unless this is paid out, let's say at the end of a quarter, at the end of a project, or anything along that kind of a type of structure, these kinds of additional pays are part of the regular rate of pay. So a production bonus or a commission, for example, that may be paid out weekly based on your performance is part of regular rate of pay. And regular rate of pay is subject to overtime. So keep that in mind, because we're going to see how this unfolds right now in the calculations. Okay, if anybody was able to have joined the HR Math tutorial, or maybe you caught the recording, this can be a little bit of a duplication for you. If you hadn't, that's why I'm going to be going through this as thoroughly, because I want to give you guys the same courtesy. I don't want to make the assumption that you were able to, join it or watch it yet. Okay, so let's talk about overtime. Let's talk about bonus. Here we have a scenario. You have an employee who is earning $10 an hour. Now, if you guys were in the exam, if I were in the exam, I should say better yet, I would be taking my paper and pencil that they supply, so you can mind map and craft all of this, and I'd just be jotting down on that piece of paper, okay, $10 an hour. It is rewriting the question, but I'm just kind of regrouping and making sure I have all of my details so that I'm equipped to, tackle the question. Things tend to get lost in a paragraph. All we see is a blurb of overwhelming information. Please don't let it intimidate you. So it's okay, just jot it down to a side. Okay, so again, we have an employee who's earning $10 an hour. Key piece of information. That employee had worked 48 hours. Whoa, 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 whoa. Stop. You read 48 hours a week, this should be alarming you. Exclamation mark, I'm tipping in now to overtime territory. Okay, good. Note to self, I'm not going to let the question fool me. I'm on it. Next. This employee has received a $24 weekly bonus, and they get 8 hours of overtime. Okay, already caught this, but that's nice. It's repeating the same piece of information. So let's calculate what this employee is earning. I bet, correct me if I'm wrong, I bet your first instinct is to calculate overtime based on $10 an hour. Don't do that. While the regular rate of pay is $10 an hour, you're right, this $10 an hour of regular rate of pay is going to change. That being because this employee is enjoying a production bonus. That production bonus has to be part of the regular rate of pay. We saw on the previous slide. FLSA says so. A production bonus is part of the regular rate of pay. So I have to blend this additional $24 into the $10 an hour regular rate of pay. So the question then is, if I made $24 over the week and I worked 48 hours, then really, what is my bonus on an hourly value? It took you 48 hours to make $24. If you could break this down per hour, what is it valued at? Think of it as well, if you've ever received a tip, whether as a babysitter, whether you worked maybe, I don't know, at a restaurant, you get your regular rate of pay, but then you get your tips. And it's like saying, at the end of my 5-hour shift, tips and regular rate of pay, I walked out with $500. Hey, my value is $100 an hour. That's exactly what we're doing here. So the production bonus value is 50 cents per hour. Perfect. So you're going to take this 50 cents an hour value production bonus and add this to the already established $10 an hour. So now the regular rate of pay is $10.50. Okay, I'm going to let this just marinate with you. Let's take a look at the questions I have coming in. Do we assume that $24 is over the 48, or could they have also received it working only 40 hours? Okay, that's a really great question. So it says here, just at the latter half of the first line, the employee earned $24 weekly production bonus. So you're going to assume it's over the 48 hours because that week the employee worked 48 hours. Now, had the employee maybe worked more hours, maybe let's say 50, maybe they got more of a production bonus. So maybe this is output based. It was an incentive. We just talked about individual incentives. So maybe they wouldn't got, maybe they would have gotten, I don't know, $25, $30, what have you. Had the employee worked less hours, maybe they would have received a lesser bonus. Think of it also kind of like tips. If you work a really long shift, you're probably going to get a lot of tips. If you work a short shift, you're not going to get as much tips. Another question is, would the 24, okay, so we just had 2 people ask the same question. So for both of you, and anybody else maybe who is thinking this, does that feel good? Does that sit well with you, that explanation? Just want to check in with you before I move on. Let me know how you're feeling about that, or if you want to, I guess, if you need me to elaborate further. So now, basically, you can say to yourself, okay, amazing. I use the $24 production bonus in my calculations. I've blended it in. I'm good. I don't want to use that again. It's not about adding it as a lump sum. FLSA says regular rate of pay includes a production bonus. So again, we take the production bonus divided by the number of hours it took to earn that bonus, and we now have blended it into the regular rate of pay. Now with the new regular rate of pay, once again, that is $10.50 per hour, it's smooth sailing. Let's calculate overtime. So the first thing with overtime is you take your now new regular rate of pay, which includes the production bonus, you multiply it by your 40 hours straight time. And what do you guys get? And I see a question came in. I'm going to take a look at that in a second. What do you get? 1050 times 40? $10.50 times 40 hours should be $420 straight time. Let's see, why are people getting 504? Not really. What were you doing to get 504? See, let me just try to see. I want to do a couple scenarios to see why you were getting 504. I'm not. Oh, okay, that could be it. The reason why you're not multiplying it by 48 hours is because 8 of those 48 hours are valued at 1.5 times the regular rate of pay. So let's actually do now the overtime calculation. So again, $10.50 times 40 straight hours. That's your straight time. But FLSA says when you work in excess of 40 hours, your time is more valuable. In fact, your time at $10.50 an hour is valued at 1.5. Okay, so you should be getting another half. So $10.50 times 1.5, as many of you weighed in, is really valued at $15.75. Perfect. Well, this $15.75 is applicable to the overtime hours, which is 8. And so $15.75 times 8 is 126. Let me know if you get a different number. We add straight time and overtime together, and your total payout in this case would be $546. I did eyeball the question that I had kind of put to a side when we were talking about the production bonus. I think everybody's okay, because that was more of a, oh, okay. So I had basically a question earlier that was saying, how might we see them like trick us and like trip us up, they being like the exam people? Twofold. So if you were faced with such a question, followed by, of course, 4 different possible options in a multiple choice question, this is what I predict you might see. Of course, you'll get the right answer, but of course, we're never going to select it, right? They're expecting us not to. You'll have an option, for example, that will have assumed that you multiplied $10 an hour, let's say times 48 hours, so 480 bucks, plus a $24 bonus. So there's your 504. Oh, that's where you got 504. Good one. Or that you did, let's say, $10.50 an hour times 48 hours. Or maybe something just really wacky and wild, and it might be like $1,057,000. I have no idea. So they're going to try to trip you up based on assuming you either forgot overtime, you forgot to break down the production bonus, or something completely wacky. Step number 1 is break down the production bonus. It's going to change your regular rate of pay. Step number 2, ask yourself, are there any applicable overtime hours? Because that too is going to change your regular rate of pay. Okay, I believe all who work over 40 hours would get the $24 bonus. Sorry, are you, I don't understand. Are you thinking that that's what the question is asking? Or you just think that anybody who works in excess of 40 hours should always get a bonus? Yes, because it would not calculate. Oh, you mean like amongst like various different types of options in like an exam? Oh, okay, okay. Yeah, so they might also assume that. They're not expecting us, exam goers, to know how to do this calculation. So yeah, they're either expecting us to like lump sum it or what have you. Okay, fantastic. But everybody feels good with this approach, right? So I don't want anyone to almost like commit this to memory, but more so understand, oh yeah, this is how I calculate my money. Okay, fantastic. Let's see a similar like situation, but now actually with piece rates. So remember, you're paid here per piece. There's a couple of different ways to go about this. I'm going to show you, I guess, the way that I go about this, but as long as we logically get to the same conclusion, then you're good. Here we have a worker who's working 50 hours. Ding, 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 ding. One thing, please, just catch, 50 hours. This is in excess of 40. I'm talking about 10 hours overtime here. I'm not going to let this escape me. I'm probably going to get overwhelmed in some other area. I write this down to remind myself. I'm not going to let this escape me. Okay, great. So again, let's say I'm a worker. Think to yourself, if I am working 50 hours a week, and in that week I produce 100 pieces, each piece is valued at $4 a piece. Let's calculate this. Again, a couple of different ways to approach this. This is my approach. Hope that this makes sense by you. First of all, I'm going to ask myself, what am I looking at total value, if you will? Not total pay, but total value. 100 pieces at $4 a piece. Basically, I'm thinking I just made $400 worth. But I'm paid by the hour. FLSA says I'm not just going to get paid $400. It's kind of like illegal. I'm a non-exempt employee. I'm on the books. So while basically I pumped out a value of $400, I want to basically figure this out amongst the hours that I spent earning this $400. So it took me 50 hours to produce $400 worth. So 400 divided by 50, tell me if you get a different number, please, is really $8 an hour. Okay, I understand. Okay, you guys okay? Do you see how I got $8 an hour? And again, you can do this differently, but you arrived at $8 an hour. So this is the regular rate of pay. Now, I don't see a production bonus or any type of non-discretionary bonus, so whew, thank goodness this is going to be easy breezy, lemon squeezy. So now that I understand what this worker is being paid, at $8 an hour, at 40 straight hours, that's $320. At $8 an hour times another 1.5 times this value, which is basically now $12, times the 10 hours of overtime that fortunately we already acknowledged in the pink font, that's $120. I add straight time and I add overtime and I get $440. How do you guys, sorry, I'm just reading something that came into me privately, but otherwise, what do you guys think? What do you guys think? Does this make sense? You want me to revisit it? Thanks, Peyton, no problem. You lost me for the last part? Okay. So do you feel good with how we arrived at the $8 an hour? Okay. Let me go, how about I go slow? I'm sorry. I was also just trying to, at the same time, take a look at a comment that was coming in to me. Sorry about that. Okay, so we're okay. We have $8 an hour. Let's figure out how much this worker is being paid. At $8 an hour, straight time calculation, which is only 40 hours because that's a straight time. 8 times 40 hours, you get $320. Everybody good? Perfect. Now we want to calculate overtime. Overtime is always going to be your regular rate of pay, which is $8 an hour, times, and that's the incentive for working overtime, 1.5. So you're basically going to add another half. So 8 times 1.5. Again, that's the incentive of working overtime. Otherwise, people may not really want to work overtime. I mean, they might because like it's still money, but you have to compensate them for, you know, that exhaustion. So 8 times 1.5, or better yet, you can also just say, hey, what is half of 8, which is 4? And I'll just add that to 8. Either way, shape, or form, however you get it, it is $12 an hour, basically. That's the overtime value. Is everybody comfortable with that? So that's the rule of thumb. Whenever you're calculating overtime hours, anything subject to overtime, which in other words is in excess of 40 hours a week, is going to be your regular rate of pay multiplied by 1.5. Okay, so then you multiply this now new $12 an hour, because that's the overtime value, times the number of hours worked overtime. This person worked 50 hours. Anything in excess of 40 is overtime. So that would be the 10 hours. Those are your 10 hours of overtime. So $12 an hour times 10 hours is $120. And in calculating total pay for that week, you add your straight time plus your overtime, and then that's where you get your $440. Does that clear anything up for anybody that, like, maybe I went too fast and you lost me? Let me just scroll up to see anybody who is also saying, how are you guys feeling? Everybody okay? Let's see, you're good. You're good, you're good, you're okay, you're good. Okay, perfect. Take your screenshots, please. I'm sorry I didn't warn you before. Take your screenshots, take your notes. Going once, going twice, 3 times. Okay, prove it. I'm evil. Here's your question. As a non-exempt employee, Tim, love Tim, I don't know who Tim is. Tim is paid a piece rate of $1 for each unit he produces. Now last week, Tim worked an extra 5 hours on Saturday. Stop for a second. That is so irrelevant. Extra 5 hours to what? Maybe he's only scheduled 30 hours. Maybe he's part-time. This is irrelevant information. It's going to mess you up. You know what you knew, and you're inferring that extra means overtime. It doesn't. Maybe he was only scheduled for 12 hours that week. Extra. Anyways, and Saturday? See, also Saturday is added here because the exam wants to assume we think Saturday is weekend work, overtime after just putting in 40 hours Monday to Friday. It's irrelevant. Anyhow, last week Tim worked an extra 5 hours on Saturday, and he produced 80 units in addition to the 370 units he produced earlier in the week. Guys, this is all irrelevant. The only thing that matters here is that Tim is being paid $1 a piece. That's all that matters. So here's the question. What are Tim's earnings for last week, having produced 450 units in 45 hours? Go. Let me know what your answer is. We're going to allow a little bit more time than we usually do. And then I'm going to pick up the pace and we're going to power forward. If this was your money, okay, forget about Tim, forget about the problem. If I'm telling you, I need you to make me muffins, I'm going to pay you $1 a muffin. If you pump out 450 muffins in 45 hours, how much do I owe you? Make this about your wallet. Okay, great. I'm going to round this to the turn of the minute. I hope that that's okay. I also just want to be mindful of the time. Okay. Okay, everybody ready? I'm going to take this up. Here we go. Question to you. Do you see and why some of this information, and I'm going to highlight it right now so you can hopefully follow along, but do you see and why some of this information is irrelevant? Anybody have any questions as to why this is irrelevant? I want to help you also to like break down the question. Okay, let me know if you do. Everybody weighed in with the correct answer. So yay! Sorry, excuse me. The correct answer is yes, B. And so I'm going to go here on the assumption that I don't need to actually, like demonstrate the mathematical approach, but does anybody want me to? In case you're thinking, I didn't submit an answer, that's not what I got, I don't get it, I guessed. You want me to go through it? Okay, let's go through it. Okay, so I have here a couple people saying, oh my God, all this irrelevant information. Yeah, it did totally mess me up. Expect this. Maybe even in a little bit more of a complex version, but expect this. So the reason why this is irrelevant information, I'm going to go back here using my blue highlighter into the question that is. It is irrelevant because Tim, it says here, worked an extra 5 hours, but we don't know what extra 5 hours is. Extra to what? Now, I don't really care if you worked extra 5 hours. It doesn't do anything for me. What I do care about is how many hours in total. Now, the exam would be would be expecting you to add extra 5 hours to 45 hours, thinking, oh, Tim worked 50 hours. That's not what the question says. It clearly says in the last statement, what are Tim's earnings last week for producing 45 units in 45 hours? So those extra 5 hours are part of this 45. Now, they also mentioned Saturday. We don't know how the regular work week is scheduled, like how is it measured? Maybe Saturday is not where it tipped Tim over into overtime. Maybe the regular work week starts on Saturday. We don't know that. Don't assume anything. So this too is irrelevant. And the fact that he produced 80 units in addition to the 370, it's not that it's irrelevant, I should say, but it's repeated because it was already mentioned at the end. Now, you can just verify 370 plus 80, yes, is 450. They repeated the information, which could make it feel like it's absolutely irrelevant or it's overwhelming. But you don't need it. Now, had it not been listed as a lump sum in the last statement, yes, you would need it. But 450 units valued at $1 a piece, produced over 45 hours, that's all you need. So with that being said, at the top in yellow, you have 45 units valued at $1 a piece. That's math I can do. That's $450. But what am I worth per hour? If I made $450 and it took me 45 hours to produce this, then basically I'm worth $10 an hour. Now, as I go over to the right side of this huge question mark on the screen, at $10 an hour, I'm going to calculate my overtime. $10 an hour times 40 hours equals $400. My overtime value is $15 an hour because it's 10 times 1.5. So $15 an hour times the 5 overtime hours is $75. So I add my straight time plus my overtime, and I get $475. I know it's kind of messy because I, scratched all of this everywhere on the screen. Does that sit well with you guys? Make sense by, I guess, your approach? Perfect. I used to get very terribly overwhelmed with this, and I get so caught up in the language. And then I started to think to myself, hold on. When it comes to money, I am as stingy as it gets. Place yourself in the question. That's what I do. I place myself in the question. I don't care about Tim. If I'm Tim and I'm calculating how much my paycheck should be, then all of a sudden, when you make it real about you, they're not going to catch it. They're not going to pull a fast one on you. So I'm being asked, what was the straight time? The straight time was $400. Take a look at the top right-hand corner here. I hope that you can see it on your screen. I know it's like really, really right at the tight corner. The straight time is $400. The overtime is valued at $75, so it comes out to $475. Okay. If anybody has any questions, we can absolutely take a look at this. Maybe in about 15 minutes when we wrap up the session. I'm going to. The straight time hourly rate was $10, correct. And the reason why it was $10, take a look now at the top middle of the screen, is because 45 units valued at $1 a piece is $450. $450 was made over a period of 45 hours. So 450 divided by 45 is 10. Yeah. I'll tell you what, I'm going to erase this. Take your screenshots, take your notes, please. We can also revisit it if you need to in about 15 minutes time. I just want to kind of, continue to power through the lesson. Okay, so let's bring this section to a close. Take a look, please, on page 107. And we're seeing something that we saw a little bit before when we talked about economic impacts, if you will, on our wages. Here's the thing. While there is going to be, yes, perhaps variable increases or fixed rate increases, and this is what Melissa walked you through back on April the 30th, if my memory serves me correctly, but when minimum wage increases, okay, whether it's in your state or it's across the board, federally, but when we see those increases, it is going to have a direct impact, of course, on those who maybe are below the now new established minimum wage. So everybody has to bump up. You have to at least make minimum wage. But then, because we want all of the pay differentials to always be relative, if you will, we're going to need to increase everybody else. So even though the high income earners, if you will have already been making minimum wage and maybe even above that, we want to basically move the wage curve, so that mid-range point, if you will, parallel to a new established rate. So you have a former rate, okay? Let's say people are making, I'll give you an example, here in Ontario. They moved the minimum wage from, I think it was like 13 and change, let's just call it $13. A drastic jump, moved it to $15 an hour. So anybody who was making less than $15 an hour immediately got bumped. But those people who were already making $15, $16, $17 an hour, they had to relatively get bumped as well. This is also what contributes to a company topping up. That's why you always want to have a 20% buffer. And that makes me think way back earlier in the unit when we took a look at those pay grades, and of course having the buffers within any pay grade or paid range. Now, we talk about as well the Equal Pay Act. And the Equal Pay Act, which is enforced, by the way, by the EEOC, because we want it to be equal across genders, across religions, across cultures, does, though, allow for some permissible differences, because we talked about individual pay rate determinations, such as seniority, such as experience, such as potential, such as anything, frankly, that we negotiated at the time of accepting the job. Listen, if you're really good at negotiating your contract, and I am not, bravo to you. Stinky on me. Now, that being said, though, while the Equal Pay Act is going to make sure we are all paid the same for equal KSAs and for equal positions and job categories alike, consider as well the differences between the Equal Pay Act and the Lilly Ledbetter Pay Act, or I should say the Fair Pay Act. The Equal Pay Act never went back in time to retroactively pay people. But Lilly Ledbetter said, I want back pay. So this is a relatively new act. It's only 10 years old. Obama signed it in 2009. And if I'm not mistaken, I think Lilly Ledbetter, she actually, by means of the Equal Pay Act, went to Supreme Court through the EEOC and yada, yada, yada. I think she was working for, was it Michelin Tires or Goodyear Tires or something like that? It was a tire company, and said, you are not equally paying me because I am a woman. It was proven, and they said, okay, fine, we're going to correct this going forward. She said, what about all the years that you robbed me of pay because I am a woman? So Lilly Ledbetter Fair Pay Act does contain retroactive provisions for back pay. Now, when, however, is it acceptable, i.e. a BFOQ, a bona fide occupational qualification, for somebody to be paid differently than another person? If there is a seniority system, it's based on length of service and longevity. We see that in organizations, and especially unionized organizations. If there is a merit pay system, think about what we discussed in Unit 3. We do performance evaluations called pay for performance. If there is a system that measures earnings by quantity, for example, or quality, such as total quality management, the incentive for 0 errors, we're going to give you an individual incentive. And we just talked about individual incentives, that being on Tuesday. And if there is any other factor other than gender, such as perhaps I'm going to pay you for being, I don't know, a contingent worker. I really don't want to have you on my payroll. You cost me a lot in terms of, deductions to the government, or perhaps the opposites. So sometimes there is a premium, but also the company can afford maybe to pay out that premium because they're not paying you benefits, for example, if you're not a full-time employee. Those are the justifiable reasons as to why we may see pay differences. Otherwise, it's not acceptable, and the EEOC is going to get involved. Let's see. Just went to a seminar on this. Key is having a system. Yeah. So you can prove it, and it can be justifiable, and can, I guess, as well, be equally distributed. If anybody has ever been audited, or you know of somebody who's been audited for being an independent contractor as opposed to a regular employee on payroll, whether it's part-time, whether it's full-time, whatever the categorization is, you know that the IRS is not very nice. They want to make sure that basically we are not trying to scheme our way out of paying our taxes. I have been audited. It's not pleasant. Don't want to go through that again. You don't even want to know what my taxes look like. Oh, yeah. So basically what the IRS is going to put us all through is a 20-factor test. And the criteria, in essence, that they are trying to assess, or they're going to be doing this 20-factor test based on, is who has control over the behavior, such as who sets your deadlines, who sets your working hours, things such as well, finances. How are you being paid? Is it automatically every other Friday, for example, per the company's payroll? That's kind of auspicious. Is it, are you invoicing? Who set your pay rate? Did you set the pay rate? And if the company wants to pay that, then they hire you? Or did they offer you a pay rate and you just kind of accepted it? Who's also in control of expenses? Who provides you with the computer? Did somebody reimburse you for that computer? And so forth. And then what is the relationship? Do you get performance evaluations? Do you have a direct report? So that's really, in a summary though, what those 20 points are going to cover. It's really not lovely. Okay, knowledge check question. The Equal Pay Act prohibits employers from paying higher wages or salaries based on length of service, from paying employees more or less based on quantity or quality of production rather than on a set rate per hour worked, paying members of one sex more than members of the opposite sex for doing the same work, or paying different amounts to employees based on geographic differences. This question is trying to trip you up based on your knowledge of the law and why the law is in place, and your logic of individual pay rate determinations. Super. When we wrap up in about 5 minutes, I'm going to stay on the line. I see some conversations. You guys are helping one another, which is beautiful, about calculating overtime and the overtime value. So I'm going to stay on the line in case anybody wants to reassess it, or if you guys have helped each other out, that's amazing. But I want to be available for you. Okay, so the correct answer is C. Amazing. Thank you very much. I guess no explanation needed because it looks like everybody weighed in with this. I have a private message coming in to me. Can you please explain wage garnishment, permissible wage differentials, and comparable worth controversy? So wage garnishment is, in other words, when you're going to have, I'm going to say a regulation, so an institution or a commission, in other words, garnishing one's wages. So we can garnish wages, for example, for spousal support. I'll be honest with you, when I was much younger and very naive, I had lent somebody money, a lot of money, to pay for rent, and that person didn't pay me back, and I had to go to small claims court. And through that case, which I won in small claims court, they went in and they garnished the person's wages so that I basically could recover my funds. So it's based on a schedule. You cannot drain somebody's bank account, but at the same token, on a proportional basis, you're going to basically recover those wages. Let's see. Let's take a look here. You also had asked about permissible wage differences. So there are what is basically permissions, in other words, to be allowed to pay somebody, or let's say two people who are doing the same job, but pay them differently. Be it, for example, it is therefore allowed, it is permissible, let's say, to pay you more than me, but yet we're doing the same job because maybe you've been with the company longer. Because maybe, for example, your opening bid to get the job was 75 cents higher an hour than mine. That is permissible. What is not permissible, for example, is that you are getting paid more than me because, let's say, you're younger and I'm older, and therefore they're thinking, she's going to retire soon, she's not going to be very quick on her feet, she's already old news kind of thing. Comparable worth controversy. So this is a controversy out there that, for example, one person is worth more than the next person. Are you worth more because you are a recent graduate and I'm not worth as much because I'm already kind of stale because I've been working 30 years? So that's what that controversy is about. It's placing worth, if you will, on somebody based on what we presume their value is, as opposed to what they've demonstrated their value is. We demonstrate our value, therefore our worth, based on our KSAs, our knowledge, our skills, our abilities. Oh, bye. I have a couple of people signing out. I'm pushing the hour again. And then we have the Small Business Job Protection Act. So small businesses may not be protected under necessarily a lot of these laws. So they have their own, if you will, set of regulations or their own act. That's the SBJPA, as you see on page 113. And these acts protect companies from, more so, I would say, going bankrupt, because they can't uphold a lot of the expenses that a company can, or a larger company can uphold. If you're Fortune 100 or Fortune 500, you can go with the flow of changes and fluctuations in minimum wage. Sure, it's going to hit your bottom line a little bit, but let's call a spade a spade. You're a very, very rich company with all of your shareholders and your stakeholders alike. A small business probably can't afford it. So I'll tell you, here in Ontario, for example, when minimum wage went up to $15, a lot of small businesses closed. They couldn't pay their people. So this act is in place to help these small businesses continue to survive when the larger, I would say, laws come in place and taxes come in place, really to affect larger organizations. But they all just fall under the same category of business operation, just generally speaking. Hope that helps. Let me know if you still have questions. 12:59. I really am a couple of things shy from powering forward. Who can stay with me for 4 minutes? Hug you right back. 4 minutes? Everybody have to run? You can? You can? You can? You can? Yes, they are right now converting. I'm sorry, my computer is just, it just can't operate as quickly as I can. And I'm going on 2 computers right now, so imagine that. It just keeps freezing on me. Okay, stick with me. Employee benefit programs. We're going to be looking right now at the mandatory benefits. That's why I feel comfortable kind of do this a little bit quickly. And then on Tuesday when we resume, we're going to look at some elective employee benefits. So we're going to basically talk all about, again, Social Security, workers' compensation, and so forth, right here, right now, like Medicaid. And then when we resume, we're going to take a look at some options in terms of like retirement, some other miscellaneous like, income replacement kinds of benefits. So the mandatory required by federal law benefits include Social Security, workers' compensation, unemployment compensation. Great. Social Security benefits, as you see on page 119. First and foremost, we have old age or disability benefits. This is for workers who retire. I believe that the measure right now is 66 years of age. Correct me if I'm wrong, because I know every single year they're adding on another like 75th of a month or something like that. So they're going to continue to extend this. In any event, this will also apply to somebody who, God forbid, is disabled. So they have to be, though, qualified as, if you will, severely disabled to receive this monthly payment. Severely disabled is a severe physical condition or mental disability that has been, if you will, like endured for a consistent 12-plus month period. And of course, you're going to have a medical practitioner is going to be, if you will, I guess, diagnosing one as severely disabled. You're going to receive monthly payment. This monthly payment is determined by your work credits and your average earnings. As well, under Social Security benefits, we see the benefits for dependents of those that are retired, disabled, or God forbid, should they be deceased. Again, it's a payment determined by your work credits and your average earnings. There is the lump sum death benefit, not a very big lump sum, God forbid, 100 times over. And then, of course, Medicare, protecting people 65 years and older from any high medical costs. So we see Plan A, Plan B, and Plan D. Plan A is your hospital insurance for inpatient care. Plan B is for your physician services or outpatient services. As a recipient, you need to pay your monthly premium, which is going to be based on your marital status and your income. And then Part D, which is for prescription drugs. So there's a monthly premium and an initial deductible, and then the patient is paying, 25% for each prescription. But Part D recognizes that even that out-of-pocket payout might be, quote unquote, catastrophic to this, let's say, elderly patient in this case. So the government doesn't want people, to basically, I guess, file for personal bankruptcy because they needed to pay for an essential in life, such as a prescription. So Part D does still cover what they call the catastrophic coverage. We're going to try to subsidize and help those who cannot pay for their required prescriptions. Workers' compensation. This is on the mentality of liability without fault. The employer and the employee have to come together and say, if somebody gets injured, it's not anybody's fault. There's 3 different types of benefits. You have a one-time lump sum death benefit. You have medical expenses benefit. You do see various different types of limitations in states, like individual states that is, so I'm not really going to talk about it in detail because there's a lot of states to cover, and not to mention you're not going to be tested on the specific, state localities. And then there is as well the wage replacement payment, looking at 50 to 70% of one's average weekly earnings. The funding for workers' compensation is actually sourced from an insurance program through one of 4 ways. It can be benefits that are provided by private insurance companies, can be a company that is self-insured, can be a state fund, or it can be a state fund in competition with private insurers. Very, very confusing. But the insurance premiums are going to be paid by the employer. The number of people who are drawing on workers' compensation because of, our company's obvious, I guess, in part it's going to be part of their negligence, but yet it's not really their fault. But in any way, shape, or form, the way that OSHA as well sees it is, how could it have been prevented? So when you're drawing on insurance, this is actually going to affect the experience rating. It's kind of like if you draw on your car insurance, then your rates are probably going to go up. And as well, the way in which you are rated as a driver changes. And then, you know what, if you don't mind, let me bypass that. I think I'll open up our next session with that question I just bypassed in the interest of time. Then we have unemployment insurance. And this is taking us over to page 124. Unemployment insurance is giving us short-term financial help in the event that, well, we are no longer working if we are laid off, for example. So the Federal Unemployment Tax Act regulates the taxes on employers. They also work very closely with the Internal Revenue Code to make sure that all of this is being collected and paid out accordingly. This applies to employers with one or more employee that has been on staff for at least 20 weeks and who is paying wages of at least $1,500, if not more, per quarter. Employers are paying about 6.2% tax off of their payroll for the first $7,000 of annual wages, as it is paid to the employees. Number of people as well drawing on unemployment insurance. 2, that is going to affect the company's experience rating. So employers have to absorb the cost of the compensation program, and those costs are based on the average number of employees that are drawing on unemployment. Hence, again, it impacts the experience rating. And that is it. We will resume on page 125 talking about pension plans, and we're going to power forward to, I wonder if I can do this. At the very least, page 156. I wonder if I can do page 166. Okay, let's be super ambitious. Page 125 to 166 for Tuesday. Drink a lot of coffee and brace yourself for impact. I'm going to stay on the line, guys, in case you do have any questions, if you want to review anything about the overtime calculations, because I think I saw some classmates helping one another, which is great, don't get me wrong. But in case you do have any questions, you're still not feeling 100%, I'm here for you. Otherwise, go and start your weekend and give you the afternoon off. Can I do that? Let's pretend I can do that in any event. Thanks for staying on with me these extra couple of minutes. I really wanted to, for once, achieve the goal that I had in place. But I appreciate it. Thank you. Let's see, any questions? Oh, right. Oh my gosh, I totally forgot. And a happy Mother's Day to anybody who celebrates. I have to go and remind my children. I wonder if it gives them enough time to buy me something. I totally forgot. Oh my gosh. I gotta go call my mom. I'm horrible. Thanks for the reminder. Alrighty, guys. Okay, anybody have any questions? Are you guys okay with the whole, how do you calculate overtime, and why is the overtime regular hourly rate a little bit more than otherwise, and how you get it? Okay. Sorry. Excuse the dead air on my part. I'm still here. There are no technical glitches. I'm just quiet for once, like never happened, so enjoy it. Okay, I don't see any questions coming in. Perfect, fantastic. All righty then. So guys, with that being said, I guess I'm going to sign out. So get ready for my next call. Have an amazing rest of the day. Have an amazing weekend. Once again, anybody who is celebrating, because if you are blessed to have a mom, celebrate her. If you are a mom, make sure they celebrate you in any way, shape, or form. If you are celebrating, happy Mother's Day to all. And have a really great and productive weekend. So guys, thanks for staying on with me extra. I'm going to be signing out now. Bye, everybody.